So the government got knocked back on its attempt to bust the tax credit system, which costs apparently tax credits are costing 30 billion a year. Now I'd be very careful about this figure, because allegedly about 4 million people are said to be on tax credits. Now, if it's 4 million people, that means that each and every one of those people is getting £8,000 apiece. Now, how it tends to work, tax credits, is that you tend to get one person nominated in the household to get the tax credits. That's quite often how it works. I'd be very suspicious that each and every one of those, if it is 4 million people on tax credits, I'd be very suspicious that each one of those is receiving £8,000 a year. That seems to me quite unlikely. What I think is much more likely is that 30 billion quid includes the cost of administration, staff, buildings, IT systems, which, as we know, the government causes a huge mess with on a regular basis. In fact, it is true to say the following statement: the British government has never delivered an IT system to specification and or budget and or timescale. It has never happened. No government IT system in the UK has ever come into budget, timescale or spec. And the tax credits replacement, the universal tax credits, the UTC, is being run by Ian Duncan Smith, the Tory minister, and he has had to kill all the old previous IT system, and of course they've done it what I would call a very strange way. They haven't killed it because it was any good. They've killed it because it was rubbish, and yet they still paid a load of money. We're talking 100 million or something to the contractor. That seems odd. However, I'm very sceptical, like I say, that 30 billion is what people think it is. I think people are being given the impression that 30 billion pounds is being paid out to 4.5 million people. And I don't think it is. However, based on my thoughts on that, we can move on to compare this with other figures. In 2008, the British government spent, the United Kingdom government spent 850 billion. That's 850 billion. That's 9 zeros. Okay, 1,000 million is a billion. 850 billion on bailing out the banks. Now, the banks are a corporate body who should really be left to sink or swim. Let's be honest, you go to the banks, if you've ever tried it, I was unemployed one time, it's going back 20 years or something, and I went to the bank and I was asking for £1,000. And the bank said, well, the thing is, you haven't got any regular income and we can't see, the future. Basically, the future looks bleak, so we can't loan you £1,000. So we had the discussion that you might think would ensue from that. And, that was it. It was a no, because the hard real world is that I couldn't pay it back, so I wasn't a good bet. Now, the banks are all about confidence. Their creditors would whip the rug away from under them if they thought they weren't solid. So then Big Brother, the state, the UK government comes along and says, it's okay, we'll totally back you. We'll back you to any extent. Right, okay. Look, if back in 1991 or whatever, when I wanted £1,000, and I got into the NatWest Bank as it was, and they'd said, well, your future's bleak, but I'd said, I've got the government behind me. The government says it's going to back me up. If there's any default, they'll pay it. Well, the NatWest Bank would instantly have paid me, in fact, they'd have said, they would have said, would you like 10,000? Right? So don't kid yourselves. If you get a big backer, you're sorted. Back to tax credits and welfare business. About 75 billion a year gets spent on pensions. The pension system is massively out of date and is based on keeping promises that were made in a whole previous era. I'm not saying that the bargain that was made back in the 40s, 50s, 60s, 70s and 1980s, I'm not saying that the people on the pensions that were substantially earned then, I'm not saying those people haven't held up their end of the bargain. What I'm saying is the bargain was bogus. The bargain made then was based on a whole set of premises that no longer hold and in fact haven't held for several decades. It was obviously based on what the government thought it could afford and what was a likely payout. The likely payout was based on the average age of a man getting to about 65, 67, in other words, barely after retirement, and the average age of a woman getting a few years more than that. Not even into her 70s possibly, right? That was the premise that was made. So the premise is all false now. Yet the pensions are still guaranteed to be paid out. Now, everyone knows why the government doesn't want to touch the pensioners. It's because they're the bunch that vote. And poor people who are desperate and who are got their face up against the wall, their back against the wall and their face against the grindstone, these people who are up against it are they tend not to vote so much. What's the point? Life's desperate, bloody hell, you know. What's the point? But the old grey-haired who go out and spend a lot of their money abroad, 5 months a year, a lot of them spend abroad, they are going to be kept sweet. Now, if you're going to talk about outrage and what's right and what's wrong, which is what the government tries to get everybody stirred up into, is it right that an ancient bargain that was made on the premise of people dying at 69 and 70 years old, I mean, they haven't upheld their part of the bargain if you want to look at it that way. You know, they should have died, they should have the decency to pop their clogs 20 years ago. But they're still hanging on. Okay, look, on a human level that's perfectly alright. But on a transactional basis, on the basis of the bargain that was struck, that is not alright. So if they're going to live a lot longer, like literally 10 times longer, you know, some of these people were meant to die 2 years after they started claiming the pension. If they're going to literally take 10 times as much pension as the government calculated, all those actuarial calculations were based on 2 years, not 20, not 30. If you're going to live that much extra, that's a whole different bargain, and we all know it, but nobody's going to say it. There's a big problem with this, which is simply this. Tax credits and all that welfare, most of it gets spent in this country. You know, I'll bet you of that 30 billion, I'll bet you about 25 billion gets spent in the United Kingdom. Right? Because it's folks buying their groceries and maybe putting petrol in the car and all that stuff. What it's not is going abroad for 5 months of the year. Right? And that money gets spent abroad, not in the UK. So in other words, a relatively large proportion of pensions gets spent somewhere else. What I'm really saying is the Chancellor can save all the money he likes on tax credits. It will make damn all difference to the balance sheet of the country. Because most of that money would get spent in this country. Effectively, the government is giving out a load of money, most of which would have been spent here, and now it's taking that money away, so it won't get spent here anymore, because it's not going to be given in the first place. No difference to the balance sheet. Tax credits, chasing them, waste of time. They are less than half what the pensions are, but the government doesn't want to touch the pensioners. Thanks for watching and listening.